Guys, how we doing? I'm Ryan Mack. Welcome back to the Trading Guys. Happy New Year. This is the first week. Well, last week we were kind of within the Discord. We were looking into stuff and taking trades and scalps and blah blah blah. However, for swing trades, you normally still find that just now markets are a little bit shitty and they're still a bit messy from the new year and the previous year and so on. However, this is going to be the first fundamental review that I've done of this year. Excuse me. So what I'm going to do is, like before, it seems that a couple of you have preferred it if I run through the technical analysis side first of all, right? And then after the technical analysis, we will then run through fundamentals. And when I'm going through fundamentals, what I'm going to do this time, which I've actually just realised, it's something that I always do, but I try and keep my videos as short as possible, and by doing that, pardon me, it's not always the best way, because there's always tons of information that I'm not telling you, and the thing is, like, when you're on trading, there's no shortcuts, right? You can't just go, oh, fuck it, that'll do. Like, you're either involved in it, or you're not. You're either doing it properly, or you're just throwing a coin in the air, you don't give a fuck, and you're trying to make some quick money, right? But for those of you that genuinely want to learn trading, learn the fundamentals behind it, what makes the market move. Prime example, yesterday I sat here and watched NFP, and the minute NFP came in, I was sitting talking to my wife. I wasn't trading, I only had trading view up, I didn't even have my trades up because I had done plenty of trades in the week, and I just thought, oh, I'm not going to give my money back to the market at the last day of the month, the last day of the week, you know, because we had a good week this week. So I was explaining to my wife, we watched NFP numbers come in, right? And I says, well, and the rest of the numbers, unemployment, employment, blah, 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 average earnings and so on. And I'd said to my wife, when you look at that number there, that now tells me right away that gold is going to be a buy. And then we're looking at gold, and it's coming down. And I was saying, well, look, it's coming down now. That's simply a pullback. Once this happens, you will then see it go. And then sure enough, after that, 30 minutes later, within that 30-minute candle, next 30-minute candle, and so on and so forth. I think the next 3 to 4 hour candles just kept constantly going up. And of course, my wife was like, oh, why didn't you take it if you already know? Do you know what I mean? Because trying to explain to people who aren't traders, it's like, well, you don't know. But the fundamentals tell you the highest probability of what it's going to do, and it's going to go up. And like I said, we already had a good week last week, so I didn't want to be giving that back to the market. So, what else? Yeah, we're going to cover technical analysis, fundamentals. The other thing that I was going to mention there, but I got carried away, is we are going to cover geopolitical events. So, one of the things that makes markets move as well is not only fundamentals, but it's also the things that we have to take into consideration, which is called the market sentiment, right? It's risk on sentiment or risk off sentiment. Now, 98% of the time, markets will be risk on, right? Because we all make money when we are risking on the markets. That's the only way to make money, is to take the risk, right? Risk management. And markets are predominantly bullish. Yes, of course, we get the bear, but markets, you always find that when it comes to market cycles, which is different from market sentiment, when it comes to market cycles, you get 5 to 8 years like this going up. Obviously, you have the pullbacks, right? But it's just going up like this over 5 to 8 years. And then you'll have kind of 2 to 3 years of it going like this, bang, 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 crashing down. And then we'll have another 5 to 8 years of it nicely going up again, right? It's because money's predominantly made in bull markets and so on and so forth. However, whether it's a bull or a bear market during the market cycle, whether fundamentals are good, fundamentals are bad, and I should say fundamentals are strong or fundamentals are weak, we have a thing called market sentiment, right, which is risk on or risk off. Now, 98% of the time, markets will be risk on sentiment. And then the remainder of the time, small periods of time throughout the year, geopolitical events will happen that will create fear within the market. When there's uncertainty in the market, that creates fear. When there's fear, people don't want to take risk. When people are like, I don't want to take risk, I want to put my money somewhere safe, that's called risk-off sentiment. Prime example, back in the day when Russia first kicked off with Ukraine, what happened? USD started melting, gold started going up. Now, people will say, oh yeah, when USD is strong, gold is weak. When USD is weak, gold is strong. That's complete and utter bullshit. It's nothing to do with the strength of the USD. It's to do with risk on, risk off, market sentiment. And if you look at gold over the long period of time of USD, you'll see that USD for the last 2, 3, 4 years has been like that, and gold at the same time has been like that. So that completely quashes the whole if USD is strong, gold is weak. It's complete bullshit. It's they just don't understand, why it happens. Now there will be times, yes, when you see USD melting and gold flying. When that happens, that's during a period of risk-off sentiment. People are taking the risk out of the US, like, fucking hell, I want to get my money out of the USD. So they're taking the risk off the table, and they're putting it into safe haven assets / safe haven currencies. So a safe haven asset is the likes of gold, silver, NZD, Japanese yen, Swiss franc, right? The USD is also both a risk on and risk off currency. The USD is also a safe haven currency. However, you need context, right? And more often than not, pardon me, the US is usually involved in something, right? Markets usually go into risk off because the US is fucked up somewhere, or they're getting their nose involved in someone else's business or whatever, right? So at that point, of course, when the USD is the one to blame for the risk off period sentiment, of course, at that point, the USD isn't a safe haven currency because that's the one that's providing the potential risk, right? So then the money would then be moving. Money flows, right? It's called money flows. Money would then flow into risk-off assets: gold, silver, NZD, Japanese yen, and Swiss franc. Okay, that's why when you look at the New Zealand fundamentals, it's absolutely shit. But if you look over at NZD USD, let me just show you now. There has been times where it's going up. Look, see like this here? There's been times where that's going up, right? And you'll be like, well, the NZD must be strong. No, this whole time here, the NZD has never been stronger than the United States. Never in a million years. So why is it going up? That's because of market sentiment, right? Now, if we come to the daily, look, it's never... Look, it's a downtrend, right? It's never been stronger. You do get these pull-ups. Look, pull up, pull up, pull up. These are during periods of risk-off sentiment and money flows, right? That's it. But overall, you can see that the USD massively outperforms since 2021 the NZD. Okay, so there's an example of it. So I'm not going to talk too much on that now. Let's just move on and let's just cover, excuse me, let's cover the technical analysis side of things, okay? Now, I am traditionally, the one that I love the most is a long-term holder, right? I want to take a trade, I want to take very few trades per month, per year, but I want to take high-quality trades. So, for example, like this right here, I want to be trading from here, right? I don't really want to be taking another trade until it hits here. I want to take another trade here, maybe not so much here. You could, but, down here, and when it gets back up here again, bosh, and we go. That doesn't always happen, but in an ideal world, right, that's predominantly what I want to do. I'm not someone who really wants to be jumping in here, taking a sell, jumping in here, taking a buy, jumping in here, taking a sell. I can't be arsed with all that. I want to take a fucking trade. I want to leave it. I want to fuck off and live my life. Go climb mountains, climb fucking volcanoes, go and island top, around Indonesia. I don't want to be sitting here in front of my screen every day like, If that was the case, then I would just get a job, right? However, last year was actually a pretty shit and boring year for swing trading. Really shit and really boring. I barely touched anything last year. So this is what I'm going to share with you because it's always very important to reflect. What I predominantly done last year, which was different from every other year, right? Now, I've explained to you the way that I like to trade. I like to take swing trades. I like to enter and just leave it and leave it and leave it. What I had done all the previous years is I had waited for those kind of weekly time frames and daily. However, I would also gladly jump in here, take the buy. When it comes up here, take the buy again and go. Now, last year I didn't bother doing that, and that's potentially why it was a pretty boring and slow year for me. This year, I am going back to doing that. So I will still be sticking to my predominant method, which I love, which is, trading from the weekly / daily / H4 timeframes. However, I'm not going to be sitting around waiting for it to hit, these weekly areas, because you can be waiting for months on end, right? I'm not going to waste my time doing that. What I'll do is I'll wait for areas of value to jump into a trade, and then I'll take it and I'll let, do the kind of intraday trading while I'm waiting for my particular setups to really come into full effect, so that I'm not really wasting my year. So I'm going to be really big on that this year. I started doing it actually last year, kind of November, and that's why I thought, you know what, fuck it, this is working really well. I'm going to do that when we go into 2026. All right, so let's go on to technical analysis. Now, technical analysis is very important. Sometimes when you hear me talk, if you don't understand the context in which I'm speaking in, you might think that I'm someone who thinks, technical analysis is a lot of shit. It's not what I'm saying. Technical analysis is one of the most important things. What I'm saying is, whenever I'm talking about it and it sounds as if it's in a negative way, is that technical analysis should never, ever be your reason to take a buy or take a sell. It can be your reason for why you're going to enter in a particular area, yes, but you should never be saying, right, I'm going to buy this. Why? Because it's broken my candle. It's fucking stupid. It's never going to work. The reason, how do you choose whether you're going to buy a currency pair? Like if you're going to buy AUD CAD or if you're going to sell AUD CAD, well, you choose that by fundamentals. Fundamentals will tell you if you're going to buy it or if you're going to be looking to sell it based on the data. For example, you look on AUD, you come across the Forex Factory, right? You look on Aussie, and it's like, right, employment is up, unemployment is down, average earnings is up, house fucking mortgages is up, PMI is up, manufacturing is up, services is up, GDP is up, in the kind of quarterly or yearly time frames, and you're like, fucking hell, this is amazing. So you now know that you just put that to the left-hand side of your imaginary screen, right? AUD is strong, right? That's it, it's fucking strong. The data tells you it's strong. Canada, PMI below 50, bearish. Manufacturing below 47.9, bearish. Unemployment, sky high. Employment, rock bottom. Average earnings, down. New house builds, down. Mortgage approvals, down. You're like, holy fuck. Oil, because Canadian dollar's massively affected by oil. Oil price is plummeting. Right, so you now know that the Canadian economy is absolutely fucking shit. So you've now got AUD over here, which is strong. Canada over here, which is weak. Right, that's it. Okay, so I now know when I'm coming across the fucking AUD CAD, I'm looking to fucking buy it. That's how fucking easy it is when you put all this together, right? But if you're just coming across and drawing stupid lines on your page and be like, okay, I'm going to fucking sell it now because it's broken a line on your page, you are going to end up in the fucking Hurt Locker. I'm telling you, right? You'll end up in the Hurt Locker. And it will go against you time after time. And look, all these areas hit. You see these areas here? They all hit, and they all hit at lower time frames as well, and so on and so forth. I keep telling you, look out for this, look. Small candle, large engulfing. The market will then come back to this area, right? It will either bounce off that, reject and melt, or if it breaks through it, the previous resistance, once broken, becomes the new support. So now, boom, you're looking to buy from here, right? Small candle, large engulfing. If you mark this up, it breaks away, comes back, retests that, rejects and goes. You could enter there, right? And it comes back for multiple retests after it's ranging. Let's have a look. Small candle, large engulfing. You mark up the small candle, you drag it across, right? Now, look, here's another one. If it, look, comes up here, rejects and goes, right? Now, if it breaks here, it will come back and retest. So it's came back for a deeper retest past this one. Small candle, large engulfing. It's broken away because this is the new area, right? That's the old area. This is the new area. The new order block, if you like. Small candle, large engulfing. You expect the market to come up, retest, reject here, and go. When it doesn't do that and it pushes on through here, you still keep this box. You still keep that box. The market will then come back, retest that area, boom, and away it goes. Honestly, it happens every freaking time. I mean, look, here's one here. So before this one was created, here's one right here. Small candle, large engulfing. Let's fucking mark it up. Small candle, large engulfing, mark up the small. Boom. You let the market go away, come back for that retest, and you go. Bang. Right? It happens constantly. Here's another one here that we're waiting for to come back up and retest, right? Small candle, large engulfing. Bang. You know, it's small candle, large engulfing. Retest goes. Small candle, large engulfing. You draw that across. Retest goes, right? Small candle, large engulfing. Right, look. There we go, look. When that area is, look, retest comes back, goes away. When that area is broken, it becomes the new, when the previous support is broken, it becomes the new resistance. It will test that area, and then it goes, right? Honestly, go away and practice this. You don't have to worry about fucking head and shoulders, loop-de-doop, fucking cartwheel, skiddly wink, all these fucking patterns. Just look for two fucking candles. Small candle, large engulfing. Small candle, large engulfing. Right? Just look for them. I'm telling you, it pays dividends. It comes in. It's one of those things like that movie. 80% of the time, it happens every time. I'm telling you, it's fucking phenomenal, right? So, this was me just showing the lads how many times it's came in. And obviously, sometimes it doesn't come back. Look, it doesn't come back. That's fine. But you just look at the next area and it will come back. See? It will come back and hit it and then go. Then there'll be a new area here, potentially here. It will come back, hit it and go. This is very overextended. So what you might find when it's very overextended, you'll get a massive pullback. It will just go. There'll be some news one day that will make that go like this. Bang, 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 bang. You know, all the way back down. And then it will start flying again. This is pretty shit. Look again. Small candle, large engulfing, broke. Previous resistance, once broken, becomes the new support. Bish, bash, bosh. Same again. Small candle. Wait, I'll zoom in. Sorry, hold on. Because I know some of you. This, because of the size of my screen, it makes your screen look. Small candle, large engulfing. Right? There's it again. Small candle, large engulfing. Comes back, retest that, and goes. Small candle, large engulfing. Comes back, retest that zone. And then goes. Bosh. Previous, here it is, small candle, large engulfing. Drag it across. Previous resistance, once broken, becomes a new support. Away we go. Right, it just plays out time and time again. But you have to be patient, right? You need to specifically wait for these little things to pan out. Sometimes you get multiple areas, right? Like here, boom, there's one here, and different time frames it'll be different. Here's one here. So you'll be like, fuck, how do I know where to put it, right? How do I know? Wait there. How do I know which one to put this on? Well, you can use the Fibonacci for, what do you call it? Value, right? So drag it from the top, drag it down to the bottom. Some people say, oh, do I do it to the body or do I do it to the candle wick? Yeah, it doesn't fucking matter. So, what is the Fibonacci? It shows you areas of value, right? So you've got 382, which I think is shit value, so I normally wouldn't take that. If it comes to the 618, really good value. 786, phenomenal value. So what the trade that I would really be wanting, right, is essentially that. That's the one that I really want. When the market comes back up, retest here, you know, and then fucking melt. However, you know, you may not get that. What might happen is this might continue pulling all the way down here. Now, if it does that, of course, all you're going to do at this point is take it from the previous high, take it down here, and you're going to be like, look, here's a candle from the market coming back up. Oh, now this is the 618. So you could then take that because that's good value, right? Previous support, once broken, becomes the new resistance. Bish, bash, bosh. So I could then be looking to take this for a sell as well, as long as it lines up with fundamentals that Euro is potentially weak and AUD is continuing strong, right? Small candle, large engulfing, comes back, retest that zone, away it goes. Small candle, large engulfing, comes back, retest that zone, away it goes. Small candle, large engulfing, comes back, retest this zone, away it goes. Right? It just, honestly, it does it time and time. And here we've got it here. Small candle, large engulfing, breaks away, comes back. It's a little bit higher. You see that? All it is a liquidity grab. It's just grabbing liquidity because it knows most people have put their stop losses above here. That's it. So it just comes up a little bit extra, bang, grabs it, and away it goes. Honestly, it's fucking phenomenal. I promise you, start practicing this, even on a demo account, right? Practice it on a demo account, mark up your charts. It doesn't matter what time frame, weekly, daily, hourly, 15-minute, 5-minute. It works on every single fucking time frame. I swear to God. Small candle, large engulfing. When it doesn't reject here and start pulling down, when it breaks through, the previous resistance becomes the new support. Bang. Comes back, retest that zone, away we go. Right? Phenomenal. Where are we? Same again. Small candle. Small candle. Wait, I'll zoom in because I know my screen makes it hard for you guys to see. Small candle, large engulfing. Mark up the small candle. The market comes back, retests, away it goes. Comes back again for that deeper retest. Bang, retest that zone, away it goes. Right? Order block, small candle, large engulfing, order block. You could mark this as obviously moving on, but you see here, small candle, large engulfing, boom. Liquidity grab, comes back up, breaks in zone, and away it goes. Every single time, guys, it works. I'm telling you, it's so freaking powerful. When you start doing it so much, you'll be like, this is fucking unreal. This should be illegal. It's that good. Right, anyway, so this is how I tend to mark up charts. So if you drag this across, it's the same thing. Sorry. Small candle, large engulfing, once broken, previous resistance becomes the new support. Bang. And it will come back down and retest this. Bosh. And away it goes. Right? It's just a mess. Small candle. Large engulfing. Breaks away. Instead of coming here, rejecting and going long, it breaks through. Once it breaks through, boom, retest, reject, into the sell. Right? Small candle. Large engulfing. This should, in theory, this should start fucking melting down now. And that's it. So we're already in fucking 22 minutes here, guys. So I'm not going to cover any more of this. Let's just move on to fundamentals, right? Because I'm just going to smash through this. So none. I always do them one by one. Remember, apart from not CHF, sorry, China and NZD. So AUD, China, and NZD. I do them all together, right? And that's because they are all. They're all closely correlated. So, as always, get your notebook out and write currency strengths, strong, weak, and then neutral, right? Strong, weak, and neutral. Do not write strong, neutral, and weak, which I know is logical. The reason for that is you write down which ones are strong, which ones are weak, and which ones are neutral. Now, I always put CHF in neutral right away because it's always neutral. CHF is traded based upon risk on, risk off sentiment. It's not traded based on data, okay? Then once we find out which pairs, which currencies are strong, which ones are weak, we then pair them up. So if AUD is strong and CAD is weak, we then now know that we want to go and look at AUD CAD, and we want to be buying that, right? So that's how it works. Very, very easy. Once you get it flowing, right? To be consistent with this and be fluid, like the way that I talk through this, it takes a bit of work. However, it only takes 4 to 6 weeks of you doing this, sitting down every single week. So what I recommend to you guys, right, if you want to practice this, every week when you see me put one of these videos up, right, don't watch it. Go away. Do all this by yourself. If you look at the description down here, I have got... Where is it? Look, I've got this. I'm giving you it for free. I've printed this off for you, right? It's a cheat sheet. Right? It tells you which ones we care about. PMI, CPI, explains what they are, So go. It's down below here in the link in the description. Go and print it off, keep it beside your desk, and then sit, before you watch my video each week, right? Sit down here and go like that, right? What one does he say is important? Rate numbers, press conference, inflation, CPI, right? What's CPI? And just work your way through it. I promise you, write down all your notes, okay? I believe AUD is strong, I believe Euro is weak, I believe Pound is neutral, blah, 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 blah. And then watch my video after it, right? I know it's a lot of work because that's going to take you at least an hour to do that. And then you're going to have to watch my video for an hour, another 30, 40 minutes or whatever, right? It's a lot of work, guys. Trading is a lot of fucking work. If you want to trade for a company in London, you need a degree, physics, mathematics, computer science, whatever. Then you need to go and get a fucking master's degree at the London School of Economics, right? So trading is fucking hard. It's just all these YouTubers and Instagrammers make you think you can just draw a stupid fucking line. Oh, it's a wibbly wobbly candle flag mark. And suddenly make fucking 20, 30 grand a month. It's bollocks, right? It's bollocks. It takes work. You need a brain cell, right, to trade. So let's crack on with this. China, NZD, AUD. What week are we on? 10th. Okay, that's this week. So let's have a look at last week quickly. Oh, that's going to be the holiday season, isn't it? So that's not going to really... Yeah, that's all holiday. Okay, so we don't have to look at that. It's fine. Okay, China, rating dog services, PMI, 52. So see, when it comes to services PMI and manufacturing PMI, right, you don't need to overcomplicate this. Anything above 50 is bullish, strong, positive for the economy / for the currency, right? Anything below 50, 49.9 below, is bearish. That's it. It's very fucking simple. You don't need to know, oh, what does that mean exactly? Above 50, bullish, 49.9 and below is bearish. GDT price index 6.3, so that's bullish. CPI month on month. I mean, we don't really care about month on months. What we really care about is year on year, because that tells you, has the economy grown in a year or has it shrunk in a year? And that's telling us that it's actually dropped, right, by 0.4. Trimmed mean CPI month on month, 3, so stable. Building approvals have increased. AUD goods trades balance, that's going to fucking collapse, by the way. The AUD housing market, like, everyone thinks they're getting such a good deal right now, and it's going to fucking crumble. I'm telling you. Anyone who's buying a house in Oz right now thinking, oh my god, the government's giving us such a great deal, you are going to get fucked in the next couple of years, right? Telling you, it's going to bite you in the arse, because your house is going to be worth fuck all compared to what you paid for it right now. Now is the time you want to be selling properties, not buying the fucking things. You know, you want to be buying them in a couple of years after the crash. Chinese New Year, I nearly said there. Chinese yuan renminbi, that means. CPI year on year has increased. PPI year on year has increased. Okay, it's still minus, but it's increased. Come on, what we've got coming up next week? Okay, we don't have a lot. We don't have really a lot of big noise next week. So I would say, as always, NZD is weak for me. China, we obviously don't write that down because we don't trade Chinese currency. AUD, I'm actually going to put it down as strong for now because it is doing quite well. Now, another thing we have to think about with NZD being weak, right? It is weak because their economy's fucked, right? Their economy is absolutely shit. However, with all this stuff going on with Trump right now, like, for example, if next week we wake up on Monday morning, Tuesday morning, it's like, okay, President Donald Trump has sent fucking Delta Force in to smash up Iran, because there's a lot of shit happening in Iran right now, right? I would have no doubt if in the next week to 2 weeks max, we start seeing America kicking off with Iran, because they've got huge protests right now, and as you know, and so on and so forth. And yeah, I mean, the Iranian government is getting no support from its people because they are predominantly Christian, right? They're not. It's not even a fucking Muslim country. It's just been taken over by fanatics, and the population is like mostly Christian. And even the Muslims are sick of it because it's that fucking strict and bullshitty, right? It's not real Islam. It's like the radical fucking maniac Islam. So even, I mean, you can watch the news yourself. The Muslims there will tell you. So I wouldn't be shocked if we see Iran kick off with, or the US kick off with Iran. If that happens, you will see, even though I've marked down NZD as weak here, context is important, right? You need to remember it's weak based on the economic data, right? Because their economy's shit. However, if that kicks off next week, you will see like NZD start to fly, and you'll be like, holy fuck, why is that flying out of nowhere? It's flying because it's a safe haven currency. So people will be taking the money out of the USD and they'll be fucking hammering it in to NZD, CHF, gold, Japanese yen, right? Same in Japan. The Japanese economy's fucked. However, if the US kicks off with Iran, you will see like USD, Japanese yen will start to melt. And you're like, how the fuck is that melting? Yeah, but, the Japanese economy is not as strong as the US. Yes, because of risk-off sentiment, so it'll start to melt. Once the risk-off is over, you want to be buying that again, and it'll fucking crack on, right? And you'll make dough. So, I mean, these videos go on forever. It's because I'm trying to share with you so much information, and there's just too much to share in such a condensed amount of time, right? So, moving on quickly. Strong AUD, weak NZD, neutral Swiss franc, right? It's just always in neutral. Let's crack on now. I'll fly through these guys, these last ones. CAD. I already know that's weak, because I follow this every single week, so I know it's weak. IVPMI, so 51.9, that's bullish now. Look, it was previously 48.4. That's a good step. 51.9, bullish. Employment change, that is bearish. It's green. Don't be fooled that it's green, okay? The reason why it's green is because, look, they thought it was going to be minus 1.8k, and it came in higher than they forecast, okay? It came in better than they thought it was going to come in. So that's it looks like it's green for that. But if you look previously, it was 53.6, so it's massively fucking dropped, right? So that's bearish, it's not bullish, so don't be fooled that it's green, thinking that green means bullish, because it doesn't. Unemployment rate has increased, so that's shit. I already know. Canada is weak. Okay, so that's CAD in week. What we got next week? Any big news? Nah, we don't really have anything for next week, okay? So let's just move on. CHF, we don't bother looking at that. It's always neutral, always, apart from risk on, risk off sentiment. Excuse me. Right, so next week for Euro, we've got CPI, WPI, trade balance. Okay, we've got a little bit of news we want to see. Nothing spectacular. This week. When it comes to Euro, right, we only really care about France and Germany. We don't really give a shit about Spain and Italy because they're too small for us to really care about. However, we do have a look at it, right? But we just don't get too wrapped up in Spain or Italy, because even if Spain and Italy are really good, but France and Germany are shit, then the Eurozone will be shit, right? France and Italy can't hold up the Eurozone. France and Germany, essentially can. If Spain and Italy can't, okay? Because they're just too small of economies. Prelim CPI, again, month on month, we don't really care about because it can change every single month. It can be good, bad, good, bad, good, bad. What we care about is the quarterly and, most importantly, the year on year, Y on Y, because that tells you, has the economy grown in the last year or has it shrunk in the last year, right? That's the most important one. That's the true reading, okay? So bullish, 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 bullish. That's all good. Retail sales, bearish, which is weird because these will be numbers from maybe November, December. So that's weird because it's Christmas time, right? So you'd expect that to be high. That's not good during Christmas time. That number's at a minus. German unemployment change. Unemployment has increased, so that is not good. That's bearish. Don't be fooled that it's green. Why is it green? Because look, it was previously 1k, right? It's now increased, so unemployment has increased. That's not good. Why is it green? Because they thought it was going to increase to 5,000. It only increased to 3,000. So it came in better than they forecast, right? Better than they thought. So that's why it's green. However, if you look at the previous, it was 1k. So it's came in better than they thought, but it still came in worse than it previously was. So that means things are getting worse, which is bearish, okay? Negative for the currency. excuse me. Core CPI flash estimate year on year. Bearish, bearish, bullish, bullish, bearish, bearish, bullish, bearish. I mean 6.3, that's pretty fucking bad. German industrial production. Bearish, 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 bullish, bit slightly. Okay, so that's pretty shit. Eurozone. I think I had Euro previously as neutral, didn't I? So I'm going to keep it in neutral for now. We've got CPI next week. Yeah, I've already looked at that. Sorry, my bad. Oh, knackered. Right, GBP, let's have a look. I mean, I already know in my mind, I think that's neutral, but let's have a look. Bullish, stagnant, bullish, bullish, net lending is up, bullish, bullish, bearish, bearish, bearish. So mixed data, right? I'm going to keep that in neutral for now, GBP. Let's see what we've got next week. I mean, geopolitically as well, the UK just isn't somewhere that's investable right now. It's a shithole. It is a third world fucking shithole. The NHS is broke. The roads, fucking hell. The roads are worse than roads when I was in fucking Kenya. You know what I mean? It's worse than the moon. There's fucking craters and potholes everywhere. It's an absolute shithole. What have we got next week? GDP, construction, good trades balance, manufacturing, production, industrial. Okay, we don't really have a lot next week. It seems to be across the board. We don't have a lot. So I'm going to keep pound, GBP and neutral, right? Let's smash through. I've got two more. Japanese yen and USD, and that's us done, guys, okay? I'll cover oil as well. Manufacturing PMI, bullish, bearish, bullish, bearish. That's massively bearish. Bearish, bullish, bullish. Right, but we already know the Japanese economy is still fucked, so it's weak. However, like I said about NZD, if next week Trump kicks off with Iran, you want to be buying Japanese yen, Swiss franc, NZD, and gold, right? If Trump kicks off with Iran next week, you want to be placing buys in the likes of NZD, USD. If it's like USD CHF, you want to be selling that. NZD, USD, you want to be buying that. USD Japanese yen, you want to be selling that, right? If Trump kicks off with Iran next week. So make a note of that. And then you can look back in it and see if I'm right or wrong, right? And then when I'm right, you'll be like, fucking hell, this guy's a wizard. Not a wizard. This is how it works, right? And you can learn that. I don't have a crystal ball. I just understand how to read this nonsense on the screen. That's it. Bank lending. By the way, can I just say something? I never used to bother with any of this, and I used to do fine trading. But there's a difference between doing okay trading and then actually understanding how it works. It's like, holy shit! It's a complete game changer, because not only does it teach you what trades to take, you now know what trades not to take. Because you might want to go and buy something, and you're like, but if I buy that, that means I'm buying a weak economy against a strong economy. Why the fuck would I do that? Because you're increasing your risk and you're lowering your probability of making money. What you want to do is decrease your risk and increase your probability of making money, right? And that's what understanding fundamentals does for you. It doesn't just make you take better trades. It stops you from taking shit trades, which you should never have taken. But if you only do technical analysis, you will take tons of shit trades that, if you understood fundamentals, you would never have taken in the first place, and therefore you would have preserved your capital, right? Next week, we've got bank lending year on year. Want to see that current account? Yeah. PPI. So yeah, next week for Japanese yen, we've got quite a lot that we want to see. Well, a couple of things. USD. Okay, bearish, bullish, 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 bearish, bullish. Sorry, that's bullish. I almost got caught out because it was red. That's employment, not unemployment. So employment on non-farm employment change is up. So that's bullish, right? It's red because, look, they thought it was going to be 49k, but it came in less than what they forecast. But look, if you look at previous, it was previously minus 29,000, right? And it's increased to positive, i.e. plus 41k. So that's bullish, my bad. I almost got caught out by the things that I tell you not to get caught out with, right? Bullish, bearish, bearish, bearish. Unemployment has increased. So again, that's bearish. Don't see that it's green and think it's bullish. It's not. It's bearish. It's green because, look, it came in lower than they thought, okay, but it's higher than previous. So unemployment is higher than it was before. If unemployment has increased, that's bearish. It's not good, okay? It's common sense, this stuff, honestly. It's really, really common sense. Bullish, bearish, bearish, bearish. Consumer credit, bearish, bullish, stagnant, average hourly, bullish, bearish, bullish, bullish, bearish, bullish, bullish. Okay, so it's pretty much mixed data. Okay, that is mixed data. I would keep USD in strong for now, even though it's mixed data. Because there's a lot going on. However, you have to remember geopolitically right now, like USD is the one kind of causing all the problems. They're talking about they've just fucking captured the Maduro from Venezuela, right? So they're now going to take over the oil. So that's a massive power move. That's incredible. So what they'll start to do is, if they start to pump in good quality oil into the market, or cheap oil as they say, it's going to bring the price of oil massively down. Now that's again, if you look at oil, it's been shorts for like the last year or the last 2 years. So you want to be looking out for that as well. When it pulls up, you don't really want to be buying it. You want to be waiting for it to pull up and then shorting it, right? Because the whole idea behind the US getting into Venezuela and producing all this oil is going to give more oil into the market, which is going to drive down fuel prices. If there's more supply than there is demand, then it brings the price down. If there's more demand than there is supply, it brings the price up. That's all it is, right? So if he's pumping more oil into the system, it's going to bring the price of oil down. Now, when the price of oil comes down, Canada is going to be even more in the fucking hurt locker, if you can believe that. You know, they are just going to be fucked. So you're going to want to continue to sell the CAD. Now, of course, there will be times where CAD is pulling up. Of course, it's just a pullback. It always happens. It'll just be pulling up to an area of value. You enter the sale and then fucking ride it down, right? What else? Yeah, and if the US is going to kick off with Iran, they're also talking about Colombia, Mexico. They're going to kick off with Mexico and start doing narco raids. There's so many people they're going to kick off with. I fucking forgot them all, right? But so we're potentially looking at a lot of risk-off scenarios this year. So you just need to be careful when you're trading the USD as strong. It is strong. You know, buying the USD. However, you have to be aware, manage your risk, because at any point in time, you know, we could wake up one morning and they've fucking kicked off with someone else, which is going to it's going to be risk off, and it's going to bring USD down for that short period of time, okay? So bear that in mind. I think that's pretty much it, guys. I'm fucking sweating my tits off here. Look, where I do my videos, look, is actually here, right? So you can see the bloody... this little corner here where my office is, if you like, the sun just beams in here and it is bloody roasting. So I'm sitting in this corner melting. that is pretty much it. Guys, if you are interested in my trading course, I've made it super cheap. Look, I've got it all here. Fundamental cheat sheet. That's a cheat sheet, print this off. Trading journal, right? And then I've got tons of, these are all videos. Everything you see here, there's 32 videos here, guys. £57. And it's yours for a lifetime access. It was previously £257. I decided to do a massive sale and just fucking be good to everyone. Cut 80% off it and done it for £57. Okay, so there is everything you need to know. Trend, supply and demand, bond, central rate, bank rates. That's the bond market. I've even explained how the bond market works and how it affects currencies. Market cycles, trend, counter trend, supply and demand, speeches, market sentiment, risk on, risk off, purchase manager index, PMI, HPI, GDP, unemployment, employment, jolts, average earnings. I've put everything you can even imagine that you need to bring you up to speed. I haven't held anything back from you guys. So if you want this, hit me up. I'll send you PayPal. Fire across 57 quid and you will have lifetime access to this. All right. So hope you have a great week. Be safe. Don't over risk. Don't over trade. Don't get fucking FOMO. If you're watching something and it starts to fly, don't enter it. Just sit back and be like, okay, I've missed it. Fucking hell, you know, what can I do to improve next time and catch it? Sometimes there's nothing you can do. Sometimes the market just flies. But don't see a market flying and try to jump into it halfway through, right? It's just going to bite you in the arse. Just sit back and say, all right, fuck it. I've missed it this time. I'll get the next one, okay? Trades are like buses. A new one comes around the corner every 5 minutes, okay? So thanks for watching. I hope you find this video useful. Yeah, feel free to like, share, subscribe. And if you want to join our mentorship, you can come across here. Look, we have got full mentorship here on Discord. We give education. We've got full signals. You can have a look at our guys' trade results. Look, these are the guys that trade with us, right? Every single day, these guys are making money. Look. Right? These are all of our students, our members. All right, so we have that on Discord. Discord is £97 a month. It's £147 a month if you don't use our broker. If you do our broker, we have a deal with the broker that they will subsidise it and give you it for 97 quid a month. All right, so I'm Ryan Mack. Welcome to the trading, guys. Have a great week. Don't over risk, don't over trade, and have a good one.